what the global setup looks like in a very, very exciting week. Pretty much just 1 week left to go before the big budget announcement. Markets are at all-time highs here in India, and the cues coming in globally are supporting that enthusiasm undoubtedly. Look at how the US markets have closed on Friday. The Dow over 200 points up, above the 40,000 mark, so has hit all-time highs as well. The Nasdaq also up, Dow futures up in the green. And it's not just about mega cap tech stocks right now. You're seeing a rotation in play after you saw better than expected CPI numbers, retail inflation numbers. Sector rotation is becoming crucial and is becoming the theme. In fact, the WPI numbers that came in on Friday weren't that great, but the street just ignored them. Right from the equities to even treasuries, because look at the treasury yields, 10-year at 4.18%, so sub 4.2% on the 10-year treasury, and that's a great setup really for India. Let's just pull up what's happening with crude right now. And crude also has snapped its winning streak. So crude has also been fairly benign, NYMEX at 82.32. Let's look at Asian markets and how Asia is opening up, because your implied open on India's side at least looks very, very positive. Asia is towards the negative side, opened fine, but mixed right now, I would say. So not too much action there, but we should focus on the implied open as far as India is concerned. And that is astonishing, 91 points up on the Nifty implied open. So you're set for a strong move. Are you going to see IT rallying massively again? Maybe, maybe not. I mean, HCL Tech was okay, slightly better than expectation, but not the same, I would say, gusto with which TCS has been greeted. So that's one to watch. Fund flows is something that I want to quickly pull up, because all of that enthusiasm which you saw on Friday's close, a lot of it coming in from FIIs. FIIs were buyers. 4,000 odd crore rupees of volumes came in from FIIs. On the positive side, DIIs were selling. 1652 crores came in from sales from DIIs. So all in all, Samina, I would say that to expect IT to take it forward once again would be perhaps pushing it a bit, a little overtly optimistic, one would think.
It's been 6 weeks. They've been carrying the mantle. Who's to tell whether that continues or not into this week of trade? But those numbers from HCL Tech, like Tamanna said, were largely in line with expectations. They've talked about the fact that they expect a recovery going into next quarter. But let's not forget, financials continue to be a weak point, and that is not expected to see a recovery for HCL Tech for further out in the year. Apart from that, a quick trade setup this morning. If you're looking at how the week looks, it's going to be a very critical week for the markets. The Nifty has eked out very smart gains for 6 weeks. We've taken all the bad news in our stride and, of course, gained on the positive news front. It's been about sector rotation largely, with the last 3 to 4 weeks being about banks. The last week, 10 days, largely became about IT stocks. But let's take you through what lies ahead as we gear up for trade. Asian markets this morning, like Tamanna said, are trading lower. You've got important data point coming out of China this morning, which is going to be that second quarter GDP data. Now, why is that important? That will give you direction for what happens to metal stocks all over the world. Depending on the performance of metals, you will expect the same happening to ferrous and non-ferrous stocks back in India as well. We are in the thick of the earnings season. Of course, you had HCL Tech that reported. You have a bunch of other companies that start reporting earnings today. But let's not forget, good earnings from TCS, a better than expected monsoon, and hopes of a rate cut from the Fed is what's keeping markets trading with a positive bias. About 190 companies report their earnings this week, which is about 36% of the Nifty 50. So it's an earnings heavy week, and 36% of the Nifty 50 companies will be reporting numbers in this week. You've got WPI inflation that's expected later on today, so watch out for that one. On the global front, ECB's policy meet is scheduled on the 18th of July. You've also got the Fed chief who will be addressing a conference, and where traders are expecting a 94% rate cut. So any commentary on that front will also be important too.
You mean 94% traders
bet for a rate cut in September.
Okay.
So we've moved all the way from 70% to 94% now. So it'd be interesting to see how that plays out. Metals, like I said, will be important. They will be on the radar on back of Chinese data that comes out later on in the day. Retail sales, job data in the US, inflation in Europe, Japan and the UK are some of the other factors that will keep our markets on the edge. In the primary market, you've got Sandstar that opens for an IPO. So if that's what you're watching out for, the primary market action, because it's largely been a focus point for the last couple of months now. July 19th is when the subscription opens. So that's of interest to you. Watch out for that too. On the technical data front, 25,000 remains an important level of resistance. That's where you've seen maximum call OI addition on the upside. On the downside, max put OI has been seen at levels of 24,000. We very sweetly gained 178 points, 186 points on Friday to close just slightly about 24,500. So that becomes again important for technical traders in terms of what bets they'd be placing. Immediate resistance is 24,700 and immediate support is 24,400. So this week's trading range is largely going to be between 24,400 and 24,700 Tamanna in session. But from the look of it, we look like we're going to open with a positive bias. But Asia is trading flat, so we will take that in our stride, and there could be a possibility that you get a gap up and then start selling off in the second half of trade. Absolutely. Unless, of course, Europe gives you a strong handover.
You know, it's going to be, I think, very news specific in the run-up to the week ahead of the budget. One would figure that a lot of policy moves will come in. A lot of expectations are going to start getting factored in. So don't be surprised if once again you see enthusiasm in spaces like defense, railways, fertilizers, etc. The consumption space also one to watch out for. Widely expected that the budget will have very, very clear moves to boost consumption, and that's one we have to watch out for. But the focus, meanwhile, on numbers that have come over the weekend, and quite a few. Let me start with the Avenue Supermarkets, Supermarts. Obviously, HCL Tech was a big one. Savina spoke about it. We'll have more detailed, in-depth coverage on it. You'll hear from the management, but let me start with Avenue and what happened over there. So now net profit was up 17.5% for Avenue at 774 crores versus 659 crores. Revenue up 18.6% at 14,069 crores. EBITDA up 18%. Margins at 8.7% were completely flat. So basically their operational expenses have really eaten into margins and the revenues which came in. 6 more stores opened this quarter, so that's a positive. This is Nuvama's view. They've maintained a hold and revised their target price of 5,091 versus 4,821 earlier. So not a huge upside, just about 3% odd. They're of course factoring in the 45 stores which are expected in FY25, and see the earnings show an unchanged PE of 75 times PE. So valuations always steep with Avenue, and that continues definitely. Store productivity remains below pre-COVID average. I thought this was one negative that the street will not take too kindly to for a company that is so richly valued. They have sustained improving trajectory of GM&A, that's good. Slight improvement in store productivity as well, and growth is also stable. So Avenue Supermarket, one to look at right off the bat. May see some negative trade because the numbers in terms of growth per store is still below pre-COVID levels. RVNL is the other one that I wanted to talk about. I mean, this is one sort of train ride which does not stop. It has had an amazing run-up, and look at that in the last 3 months, the kind of run-up, even in the last week, the kind of run-up it's had is astonishing. It took a bit of a breather in Friday's trade. So there is a news point here. They've received an LOA from the Central Railways for about 133 crore rupees. The contract is for modification, upgradation of existing electric traction systems, and it will be executed in 24 months. Now, in the big picture, it's not a massive contract which is going to move the needle for RVNL. But remember, for an RVNL and for a clutch of rail stocks, a RailTel, IRCON, IRFC, it's all been about a sentimental boost. And that's what we really need to see. Are you going to see this continuing specifically in this week? So I would put RVNL on my radar. Suntech Realty is the other one. Business updates have been coming in, and business updates have not been received with a lot of optimism on the street so far as real estate specifically goes. So Suntec Realty in that lot. Pre-sales have come in at 502 crores, up 30% year on year, so healthy figure there. Collections are up 19% year on year. So let's see if Suntec Realty also sees a boost because of this. These are a few on my list, but so many more today, Samina. A lot of focus on results, isn't it?
Yes, and I think the stock of the day will be Irida, is what my bets are. The stock has had a dream run. It's up 60% in 1 month. Remember, it went public in November last year at 32 rupees a piece. The stock trades 771% higher from its listing price at 284. It went up flat in terms of trade is what we saw, but the last 12 months, like you can see, the results are phenomenal, to say the least. Now, what is driving Irida is again a very good set of earnings. So the company posted earnings that had a clear beat to street expectations. Revenues were up 32%, coming at 1,511 crores versus 1,143 crores. You've also seen profitability improve significantly. They are doing pretty well in the banking and financial space. So what we are expecting is that the counter will get a thumbs up when it opens up for trade this morning. You also want to keep in mind that the last few weeks have been all about a budget play. Expectation is that there could be announcements under the PLI scheme where Irida could be a key beneficiary. On back of that, the stock has been a trader favorite. Now, of course, with very solid earnings coming their way, a further upside is what traders and analysts are betting on. I think the consensus target is about 350 rupees on Irida in the near term. Well, apart from that, smaller companies, but definitely worth a mention. We'll keep it with earnings and then go into other news flow that some of these stocks will be tracking. Is 5 Paisa Capital. Net profits have jumped 39% to come in at 20 crores versus 14.5. Revenues also grown 21% at 102 crores versus 84 crores. The stock had a flat day before we went into the weekend, but these are again good numbers. So ahead of numbers, it went in flat, least limited expectations, but you could see an up move in today's day of trade. Bansali Engineering Polymers. Net profits have increased 5.6% to come in at 53 crores. Revenues have climbed 15.5% at 340. EBITDA has risen about 8.9% to come in at 61.6. Margins, though, have contracted at about 18.1 versus 19.2. The stock was down 5% ahead of its numbers on Friday. One quick one before I hand it over to Tamanna for some more earnings is Geojit Financial Services. Net profits were up a whopping 107% at 45 crores versus 22 crores. So this one could again be a big move with Irida in early trade. Revenues have also jumped significantly, up 56% to come in at 181 versus 116 crores. So all in all, I think 3 good earnings, 2 slightly flat is what I have so far, but it is going to be a busy day, I guess.